Most people have been taught the virtues of saving for a rainy day. But want to hear something crazy? When you put money in the bank, you lose money. How does that work? The problem is when interest rates, what the bank pays you in exchange for making a deposit, is lower than inflation, the rate at which money loses value. That means your money is actually worth less in the future than it is now. And what the bank pays you is always lower than inflation. Your savings account, if you're lucky, offers 0.5% and the average savings account offers 0.1%. This is one of the main things wealthy people know, which is why they rarely ever leave cash sitting. For example, it's not that you put in $100 and get out $98, but that the $100 you worked so hard to save can buy $98 worth of stuff next year. Did you know that? This is what the economists call your purchasing power. That's why investors talk about beating inflation. Interest rates and inflation are in a race to make you money and steal your purchasing power at the same time. You're Superman and ready to fly, but inflation is the kryptonite dragging you down. And right now, inflation is winning at a whopping 7.0% for 2021, when on average it's only around 1.5 to 2.5%. That doesn't mean saving is bad. It's still how we get enough money together for important things in life like weddings, a first home, or a family emergency. And putting money in the bank is, needless to say, a lot safer than keeping it under the mattress. So where can you get a better interest rate, a stronger sword in the battle against inflation, and still keep your money safe? Rule 1 to remember is that real assets perform excellent in high inflation times. For example, if you own a home or are thinking about purchasing one, it will appreciate much more when inflation is high. And when inflation is low, it will appreciate less. On the contrary, during low inflation times, growth stocks perform significantly well during low inflation periods. Think Shopify or Twitter. Value stocks such as Apple and Microsoft perform better in high inflation periods. So where should you park your money to beat inflation and make money? Well, before we get to our investing recommendations, go ahead and leave a comment below of what investment types you like best. Let's get started. Look no further than the stock market. Many people aren't comfortable putting money in the stock market, which is why you don't have to be aggressive. Putting money in a safe ETF such as the Total Stock Market Index SPY, VOO, or even Tech QQQs. The first two ETFs cover the top end of the stock market and protect you from almost all significant swings. This way you're safely investing, still have access to your money and best inflation. Of course, always only put money into investments you won't have to touch for at least a year or two, but if in the event you have to, those 3 ETFs are safe bets. Another great option to invest for beginners or people who just want to invest on autopilot is micro-investing with robo-advisors. With micro-investing, you can start investing with as little as $5. This makes it the perfect option for college students or anyone who wants to invest but doesn't have much disposable income. There are plenty of micro-investing apps you can choose from with an initial investment of $500 or less. These apps are easy to use and cater to brand new investors. Here are 5 apps you can look into. Robinhood. Robinhood is an excellent option for new investors. There's no minimum balance to open an account with Robinhood, and the company doesn't charge any trading fees. And the company's app is relatively intuitive to use. Plus, Robinhood is one of the few micro-investing platforms that let you trade full stocks, mutual funds, options, and cryptocurrencies. Acorns. Acorns is one of the easiest and most low-cost ways to start investing. There's no minimum balance required to sign up for Acorns, and the company only charges $1 per month. Stash. Stash caters to all different types of investors. When you sign up, you'll take a brief survey to determine your level of risk tolerance when it comes to investing. From there, you'll pick how much and how often you want to invest. And Stash lets you choose the types of companies you want to invest in. So, for instance, if you're only interested in investing in eco-friendly companies, you can specify this in your profile. Betterment. Betterment is a good option for anyone interested in micro-investing but wants to have a little more control over their investment portfolio. The company does the investing for you but allows you to work with a financial advisor and have more say in your investments. There are no minimum balance requirements to sign up for the company's most basic plan. However, The company does charge a 0.25% monthly fee on your investments. And if you're not yet ready to invest, remember there's more than one way to get ahead. Just keep saving until you're ready to purchase that home you've been waiting for. It's always a good idea to invest in yourself. Paying down debt is a great way to drastically increase your savings, which help to invest later. Hopefully this video will put you on the path to financial freedom. Don't forget to leave us a comment below on your preferred investing strategies, and thanks for watching.